Investor's Edge with Gary Kaltbaum. Straight talk about you and your money. Now from the BizTalk studios, here is Gary Kaltbaum.
And welcome once again to Investor's Edge. I'm Gary Kaltbaum, your host. Hey, thanks for being with us today. Glad you're here, ladies and gentlemen. Happy that you are listening. Yeah, I know we're back. And yeah, I know we don't have a lot of good news. But if you've been listening, you may have bypassed a lot of it. It is Monday, 2 days after SummerSlam, and boy, what a good SummerSlam it was. All right, that's my wrestling for the weekend. It is August 5th, 2024. Hope you had a good weekend, as you know. Traveled up to New York, traveled back to New York. As usual, flights were delayed like crazy. Well, we had some weather here in Florida. Saw my grandson, saw my parents. On one end, the grandson. On the other end, my parents. 92 and 91. Mom's out of the hospital, back at home. But just letting you know how it's going, you can tell strength has been sapped. Had surgery for a stroke. No bad real effects, but the age thing is going on. And for the first time ever, my father said we may need to go into assisted living, which I think we should, but he's never always said. He would always say to me, I'm not going anywhere, with a couple of expletives in between. So that was the weekend. Heading back at the end of the week. That's how we roll right now. Ladies and gentlemen, this is a show about everything that affects you. We do the markets, the economy, jobs, debt and deficits, central banks, and the like. We have warned you about the recent happenings in the market. We don't know what's next. We don't know about tomorrow. We don't know what rabbit they're going to pull out of their hat out of D.C. Because we know they're very good at that. But the Dow was down 1,034 today. Hit a low, I believe. Let me give you the exact number while I got you on the Dow. The Dow hit 38,499, so it was down about 1,240 at one time. Damn. Yeah, I think that's about right. The S&P finished down 160 today to 5186. It was as low as 5119. So add about 67. At one time it was 227. The NASDAQ, the bad news, I keep mixing it up. It was down 576 points today, the NASDAQ. The good news is, believe it or not, at one time today, 1,084. And that was right at the open. The NASDAQ 100, the bad news is it finished down 545 points today. The good news is that at one time today, 17,435, that's 460. It was down 1,005 points today. Let's do this by the book. Shorter term, which means what's been going on about now, over the last couple of weeks. Price is stretched, extended, oversold to the downside. I would love to say the other part of the equation, that bearishness has really picked up. But I watched today, one after the other, saying It's just a correction. It's not a big deal. Everything's going to be fine. Don't worry. It's A-okay. None of these people warned you about the drop like we did, though. Now, we're not saying they're wrong. Maybe the worst is going to be over because the Nasdaq's loss was cut in half today. I wouldn't be surprised if we bounced from here even more than we bounced today. For some reason, the market loves going Nasdaq. Beats the hell out of me why. That's the short term. The bigger picture is ew. That's the best way I can put it. And all the questions have been, is this going to turn into something of real consequence? I do not know. If you remember back when things were topping in 21, and we were telling you things were topping left and right in 21, we used the same verbiage at the time, and that was, all we can tell you is we are now in one heck of a decent downtrend. That's all we can tell you. And as things worsened, we just guided you to the point of bear markets. And we knew more and more when every day we would come on this show and say to you, oh, I got 30 more names that broke. Oh, 50 more names that broke. 80 more names that broke. Oh, 3-to-1 negative advanced declines. New yearly lows, 800. New yearly highs, 8. The process. This started July 11th with the top in technology. That was the day we told you we thought it was a big sell signal. We even went out of our way and told you we sold most of our tech. We sold the rest of it just a few days later with Apple and Amazon. Very good sell on Apple, too. But that led us into last week. Because of getting out of technology, we were in lots of cash, but we did own. You know, they small and mid caps were acting well. The S&P broke back above the 50-day moving average last week. But we never got invested to the point we were 85% in cash. And by going into Friday, 100. Full and fair disclosure, we have accounts that come in that are transferring a ton of stuff. They'll have some things transferred in. We're talking about our fully managed accounts that have been for a while. Do we think the powers that be are going to step in? My best guess is yes. Will it matter? Well, with things so stretched, extended, and oversold, probably yes. In the near term. Probably yes. In the near term. I don't know if I can go further than that. We'll see. I have yet to scan. Most things, I'm going to use a certain term. Most things are busting up technically. Some things worse than others. And what that means, busted up technically, breaking trends, breaking below support areas, downtrends of unknown price and time. And then you've had these moves. The Philadelphia Semiconductor Index at the low today. By the way, finished down 88. At one time today, it was 42.90. It was down at one time today about 327, only finished down 88. At the lows today, since that July 11th top was down 28% in less than a month. This is the all-important semiconductor index, the SOX. And that's the index. A basket of stocks, which means a bunch of them were way worse. So as somebody that got the hell out of the way, what we're looking for now is some defense. Got some today in the NASDAQ. Being down 1,000 and finishing down 500 and change. That, believe it or not, that's defense. Up next, I'm going to tell you where. And then we got to take a few things on. This is the one and only Investor's Edge.
Hi, I'm Gary Kaltbaum, host of the nationally syndicated radio show Investor's Edge. We're not just handsome radio people. We manage investors' money for a living, specializing in fee-based discretionary money management. No big commissions, just a fee on the assets that's managed. We also provide a full range of personalized services, including retirement planning, fixed income, and educational needs, all to assist you in achieving your financial goals. Understanding not all individuals have the same needs, we'll carefully evaluate your personal goals to determine a proper investment strategy. If your current approach to investing is not getting you to where you would like to be, call us to make an appointment for a complimentary portfolio review. The number to call is 888-422-5559. That's 888-422-5559. That's 888-422-5559. Investment advisory services offered through Kaltbaum Capital Management.
It's time to switch on the integrator units and get the brain cells working.
You're listening to
Hey, this promises to be fun.
Investor's Edge
The last bastion of quality programming.
with Gary Kaltbaum.
It doesn't get better than this.
So, if I'm to take out any positives today, just today, the NASDAQ went down to the long term. Remember what a moving average is. It's just adding up the closes of the day and dividing by that number. We follow the 50-day moving average as the end-all be-all. The 200-day is the longer-term moving average. Once you get below that, you're in hell. The NASDAQ went all the way down to it today and a little bit undercut, but finished nicely above it today. So potentially a line in the sand near term. The NASDAQ 100 did the same. I didn't even realize this, but the NASDAQ at the lows today, we have gone from 18,671 to 15,708. 2,900? It's like 16% since July 11th sell signal. I hate to use the we'll see. We'll see. New yearly lows, got about almost 900. New yearly highs, not really. You know where the highs are, right? Defensive issues, for the most part. Advanced declines today, bad. Which takes us to the other parts of the equation. So as you know, we think there's, crypto. Crypto was smashed, and we continue to be of the belief that it's just a high beta asset. Got melted down today, pretty decent. Be careful. Which takes us to the next part of the equation. What's causing all this? As you know, we've been on top of it. As you know, we try not to target things and predict things, but outline things with some logic. I say that I'm Mr. Logic, and we've been pretty logical about things. So let's do a few things here. Number one, technology stocks. As we explained to you, they became the most concentrated in the market in history. Six stocks with 30% of the S&P 500. 8 stocks, almost 50% of the NASDAQ 100. The 6 stocks were all the big tech. Of the 8, 7 were big tech. How do you get there? It's when institutions get over-owned, over-loved of certain things, and that's where you end up with all that concentration. When things go awry, where do you think they sell off? That's number one. So that July 11th signal was this big gargantuan down day on very heavy volume. And that just gives us a big signal. Where do we learn about these signals? Well, we've been doing it for many years for you. Go get the books that we tell you about. Go get the books by O'Neill, Gil Morales, John Boyk, B-O-I-K, Market Wizards books, Mark Minervini, Stan Weinstein. They're all in there. So technology in big trouble. We also outlined for you the potential for the hype, the tout, the over-ordering. Very often in semiconductors over the past few decades, things get hyped, touted, and companies buy more than they need or buy more than they think they need. And when they end up with too much, it ends up being what they call a glut. And when there's a glut of chips at these places, they don't have to buy any more. What do you think happens to the makers of chips? Their earnings and sales fall off a cliff, and there goes the stocks. And we're worried about them because you have names now like Micron, just for the heck of it. Have you heard that Micron stock has dropped from 157 to a low of 90 today in a matter of 6 weeks? You haven't heard that. You know why? Because analysts have kept their strong buys on it and keep raising their targets. And I can go through the rest of the names, but I'm making my point with that one. So that's that other component. We'll see. Over the weekend, Warren Buffett announced that they got rid of half their Apple stock. Apple opened down $20 today. Finished only down 10 and change. I almost bought Apple today. We sold it up at 228, but I'm not courageous. So we didn't buy. I wish I did. On the open, I would have made some cheese, but I'm good with that. It's not like I would have bought a ton and changed my world. So there's these things that we're watching, and then, of course, there's the economy. And here's the problem. The powers that be have made themselves so important. And we have found out the powers that be don't have a freaking clue what's going on. And there's a word, an intangible word, when it comes to markets that sometimes bubbles up to the top. Confidence. So if the number one most important financial man on earth doesn't have a clue, and it showed up again that he does not have a clue, what do you think markets do? I think there's a component of that also. And you know what we mean by that. Jay Powell was major league behind the curve and wrong when inflation started skyrocketing, caused all that problem, and now he's major league behind the curve on the economy as rates have plunged while he just sits there. And Wednesday of last week had an opportunity to play a little catch-up, and he just sat there. And now with him sitting at 5.5%, yields are down to 3.785 on the 10-year. That's behind the curve. It's like me running the 100 against Usain Bolt. I would be Jay Powell. Usain Bolt would be the 10-year yield. And the markets are in recognition of this. They got pissed off back in 21-22 one way. They're happening the other way right now. And the problem is, Jay Powell is still the most important financial character on this earth. But it's not just that. It's the reality. I think it's the reality that yields coming down like this are telegraphing some economic strife. We have been telling you for a while about some economic numbers that headed south, but also told you until the job market goes bye-bye. We'll talk the jobs next and much more. I'm Gary. This is the one and only Investor's Edge.
Listening to
America is talking.
Investor's Edge.
He's got to be pleased with that. The crowd is just on its feet here. He's a Cinderella boy.
With Gary Kaltbaum.
Comes highly recommended. You're going to feel better if you talk to him.
So, for about 3 months, we've been saying to you, just giving you some channel checks of ours. We have been telling you how much more people were paying for so many things, and not just at the supermarket, but for insurance, health, home, auto, paper goods. Have you seen chips? Have you seen how the bags are so much smaller now in potato chip and Doritos land? That's the shrinkflation. That's been going on. But what else has been going on? What else we've been telling you? Amazon and Walmart, that between the two do like 1.3 trillion in revenues, have stated they're worried about the consumer. Yet Jay Powell is out saying, yeah, we're good. Who do you believe? Who would you listen to? Two retailers with 1.3 trillion of revenues, or a guy that sits in the Eccles building in Washington, D.C. picking his nose? Little sarcasm. Or Starbucks, that I was telling you, the ones we go to, their business is down 25%. By the way, Starbucks just announced sales down 6%. So maybe the ones I go to, not as well. Those are same-store sales. Retail chains. I get emails every day to go to these websites. They're giving you 25% off, 50% off, 35% off. Why do you think retailers are doing that? Why do you think McDonald's is doing $5 meals and some doing $4 meals? We've been telling you these things. Let me explain why. It's to attract consumers, because the consumer is spent up and beat up, caused by Powell and Biden. Powell's printing of money and Biden's asinine, ass 10 and ass 11 spending, deficit spending. But all we've heard from the Fed is soft landing. A lot of pundits, soft landing. Today, the many said soft landing. And then there's some jackasses that go out and tell you, oh, it's just a correction. Don't worry. And I'm thinking to myself, wait a minute. I've got like 1,000 stocks that are down 25 to 40%, and somebody has the nerve to go out there and say it's just a correction? Up yours. Tell that to the people that are getting whooped. But I digress. So again, I have no idea what happens tomorrow. I try to take what I can feel from the market and see from the market, and the best thing I can tell you today is the NASDAQ almost cut losses in half, held the 200-day moving average. I would not be surprised if it bounces some here, but is that going to change the complexion? And I would just tell you, be careful of that. We'll let you know if things change. The Dow stayed down worse than the NASDAQ 100 today, for whatever reason. Even defensive stocks got hit because all stocks get hit, and we tell you we're not buying defensive. Financials came down pretty hard today, but Goldman Sachs was down 30, finished only down 11. That's also good to see. We're trying to take out anything good coming out of this. Now, what about Powell? Well, the talk of emergency rate cuts, he's going to do everything he can not to do one. That's my opinion. Just my opinion. But I do believe if the markets continue to swoon, the hand may get forced. And the bottom line is, the market's pissed at him. He's missed the boat again. And we're talking just market here. Just remember, if he lowers rates, it's not going to affect you or I. Rates are already down. Now, why economic trouble? Why? Well, if we're paying 25% more for everything we buy, it can be economic trouble. And if companies are having issues, guess what? The job market. And as we've stated to you, the job market, it looks like it's starting to, we use the term falling off a ledge. We don't think it's fallen off a Grand Canyon ledge, but it's definitively softening. And the question is, and there's some people out there that believe once it gets moving the wrong way, it stays moving the wrong way for a while. I'm agnostic on that statement. Here's my big worry, though. Anybody know a gentleman by the name of Austin Goolsbee? He is now one of the central bankers. I think he's a voting member. I'm not 100% sure. I'll have to check that. I'm going to make a statement that he said today in an interview. And this is what scares the living hell out of me, ladies and gentlemen. And it really does scare the living hell out of me. One of the central bankers. Now, I don't know if he's talking for everybody or just himself. If the economy deteriorates, the Fed will fix it. The economy is $25 trillion at this juncture. You know who the economy is? It's not them. It's us. It's 160 million people that go to work every day trying to do better for themselves and families. But we're being told by a central banker, if the economy deteriorates, they'll fix it. The people that caused the inflation will fix it. The people that were way behind the curve of inflation, were wrong on inflation, will fix it. The people that are now wrong on the economy, and we'll find out to what extent over time, they'll fix it. Do you know how ill this statement is? Nothing personal. This is purely business. I'm sure he's a nice man. Never met him. I've seen him on TV a lot. But you know how ill that is? They're going to fix a $25 trillion economy that they've screwed up big time? And by the way, enabled massive debt and deficits from the Morlocks in D.C. with their 0% rates. created distortions where people refused to sell a home because they got 3% mortgages, which was created by one man's whims, not the free market. They're going to fix it. Let me repeat. It scares the hell out of me. Notice my silence. So, wouldn't be surprised if we bounce from here. Have no clue about tomorrow. I don't know what central bankers are going to do. I don't know if Powell's going to do anything. Maybe he's just going to sit there. I do not know. I do know what a downtrend looks like, and I do know what oversold looks like. You got a combination of both right now. I do know when the market's speaking up about certain things, and the market is worried about the economy right now. We were asked about, isn't it good if the Fed's going to cut rates? Well, the market knows they're going to cut rates already. Market already knows it. He's going to cut rates already. We can't guarantee anything here, but if we could, that would be a guarantee. We're also, it's probably early, going to keep scanning what's holding up best, what refuses to go down, what's holding up, what were the great reactions to earnings. Why? If they can't go down the bad market. Up next, we'll finish off Mr. Goolsby. Our thoughts on that. I'm Gary. This is the one and only Investor's Edge.
You're listening to
What are we waiting for?
Well, what are you waiting for?
1, 2, ready, go.
Action!
Investor's Edge with Gary Kaltbaum.
Okay. So, let's talk about who's the economy. What'd you do today? Went to fill up gas in your car? At a gas station? Maybe it was a 7-Eleven? Or maybe it was a gas station with a store? The person behind the cash register giving you your lottos or paying, or you paying for your smokes or whatever you got there, your Red Bull or whatever. That person's the economy. You pass a lot of trucks today, big 18-wheelers. Those truckers, I don't know how they do it, by the way. They're the economy. You pass a bunch of schools. A lot of them are down right now. It's summer. Those teachers, they're the economy. You know, at those schools, they have janitors. They're the economy. The baristas at Starbucks, the people stocking the shelves at the supermarkets and the stores at 3 a.m. in the morning that you never see, they're the economy. Not Winston in the background that's barking. The landscapers were at my house today. They're the economy. And the people from Waste Management picked up the garbage at my house today. They're the economy. The billionaires that have created massive wealth, they're the economy. The engineers, the construction workers. I don't know how some of these construction workers do what they do. They're the economy. Lawyers, the economy. Paralegals, the economy. Baseball players, football players, tennis players. Did you see Djokovic against Alcaraz this weekend? Wow. They're the economy. The owners of any business are the economy. You're the economy. I'm the economy. We're the economy. And we're doing everything right. We're waking up, thinking about our families. How can we do better than yesterday? How can we take care of our families better? How can we take care of ourselves better? How can we make more money? What can we do differently? That's the economy. I call it the economy of striving. The economy. And as I taught my kids, you better treat the person who cleans the toilet with more respect than the CEO of the building, because if the toilets go awry, you're SOL, as they say. Yet Austin Goolsbee says, oh, if the economy goes wrong or gets worse or deteriorates, they'll fix it. I would respectfully say this to his face. You can't fix it because you have no ammo. We're bigger than you. We're better than you. We're smarter than you. And all you do is get in the way. You've missed the mark every time. You're not proactive, you're reactive. And your love of massive debt, deficits, easy money, printing money. By the way, Austin Goolsbee worked as an economic advisor in the White House while these deficits have skyrocketed. Who's going to fix the economy? The economy would be much, much better if these people would get out of their government jobs and maybe get into the economy like we're in. Therein lies the problem. They try to fix it. The problem they created, and they make it worse every time. There's your economy. When you see those chips are half the size bags, they cause that. People not selling homes because they will not switch from a 3% mortgage into a 7%, they cause that. Yet they're going to fix things. As I have stated before, it's like going to a doctor for your broken left arm and they put a cast on your right arm. I have never been more hopeful and optimistic on us. I have never been more pessimistic on them. And statements like that, as well as the reactive from the most important financial person on earth that is now so far behind the curve, pretty much on record. I'm sure you'll hear about Japan also. That's an outcome of 0% rates forever and using government to buy up their stocks and just raising rates a quarter a point and create a 25% drop in their market. A quarter point raise created a 25% drop in their market. Fragile? You bet. You know where we stand We pull no punches. Hopefully tomorrow's better. As we stated, very oversold, very stretched to the downside. Bounces can happen at any time, even tomorrow, but we want that major trend and get it right. Have a great one, everybody. Drive carefully. When you get home, do like we do. Quite simple. Make sure you hug your family. Make sure you hug your children. They will feel better. You'll feel better. I promise. Appreciate you joining us. Until tomorrow. Good night.
This has been Investor's Edge with Gary Kaltbaum on BizTalk. To listen to past episodes or to get in contact with Gary, go to GaryK.com. That's GaryK.com.